All righty. Good morning. Good morning. How is everybody doing? We have got a lot to go over. The crypto markets are they're going pretty wild right now. They're going pretty wild. Let's take a look at Bitcoin really quick before we kind of do the full introduction. Kind of rejecting at that 28K level. I'm just getting my lights set up here, but yeah, guys, I know that there's probably not too many people on here right now. Hopefully, people will be trickling in here. Haven't done a morning market update in a while. Maybe I'll text Johnny. Let me see if Johnny wants to hop on to the morning market update. But yeah, let me know how everybody is doing. Let me just move this over here. Turn that off. And yeah, we'll get the show rolling, guys, because there was a big report that came out, and there's actually been a lot of developments. I mean, Tron got sued. Justin Sun, I should say, got sued. We had the Arbitrum airdrop. So yeah, we'll be covering a lot of those things. Maybe take a look at some altcoins as well. Just take a look at how markets are doing overall. Hex down a decent amount. Look at that. Crazy. Wait, what? Spiked up to 83 cents. No way. That's crazy. If anybody got in on that, if they sold there somehow, that's a crazy spike. Wow, Alchemy pay optimism. Yeah, so it looks like we're definitely having altcoins pull back. VIX is picking up. Deutsche Bank is going under. So yeah. But what I do want to go over today is this. This is the White House report. This is page 262. So this report is the economic report from the president from the year 2022. It basically goes over, obviously, what's going on in the country, like inflation, and even a certain part of it is going into deep dives into crypto. Let me see if Johnny's going to be joining here. MMU, if you want to join. And then let me participants invite. Sorry, I'm just sending Johnny the update here. Maybe he'll hop on really quick. Oh my gosh, why is this thing doing that? Come on, give me this invite link. Copy invite link. There we go. So yeah, like I was saying, there's been a lot of reports that have been coming in. So we'll be diving into this. I have almost read the whole entire thing. It is pretty lengthy. As you can see, it's 500 pages. But if you go to page 247, I believe, or to chapter 8, or 242, I believe. 240, 239, one of those pages. Yeah, okay. So if you go to page 237, yeah. So if you go to page 237, this is where it really starts to dive into the crypto side of it. And again, if for those of you that remember, basically back in March 2022, the White House put out, or Biden made an executive order to basically say, hey, we're going to research the cryptocurrency market for the next 6 months, gather a lot of data information on it, so that then later on we can start implementing regulations, rules, things like that. And throughout 2022, they kept giving us updates. They had a update on their report in like August, September, and then they said that they were going to look into DeFi a lot more, and then they would have their resources and research concluded by February, which we did get another update on that, and now the official report has come out. So it's actually a really interesting report because, hence the title, the White House is bullish on cryptocurrency, because the way that they've been talking about it, at least in this report, yes, they are talking about the risks of it and, how it doesn't really necessarily have utility or value, which, we know it does. But they talk about DLT technology, right? Distributed ledger technology for a good majority of it. And they're talking about how like that itself is going to revolutionize the whole entire digital marketplace, right? Not even necessarily just like trading and bartering, right? But like just overall, like anything that is going to be digital and on the marketplace. So even like stores, online shopping, like they are really bullish on DLT technology. So that's why I think that even after all the research and even after everything that's happened in the crypto market, they're actually looking at it, from a very positive or from a very opportunistic side. Okay. So before we dive into that, like I said, let's just keep taking a look at the markets really quick. Wow, gold's actually pushing up there. We'll see if we get that rejection at the triple top. And like I mentioned, Bitcoin is getting some resistance at that 28K level. This is the one level that everybody wants, to see Bitcoin come through, hit that 30K, 31K. Maybe we'll get a squeeze up higher. We'll see. So yeah, I mean, March is actually almost over. Let's see how much we have left in the monthly. I'm sure the monthly candle. Oh my God, look at that monthly candle. Yeah, monthly candle looks crazy. This February was wild, but yeah, this monthly candle is definitely pushing up. Got about a week left in the monthly candle. So yeah, we'll see how this closes out. We got 3 people in here. Hey, 3 is better than 0, right? And then yeah, the Arbitrum airdrop, that is live. As we can see, it pretty much opened at a $5 price. The network actually crashed at one point because that's how many people were trying to claim the airdrop. And people are actually unable to claim it. So yeah, I actually didn't get to claim it for about the first hour and a half. And yeah, I had about 1,700 tokens airdrop that I could claim. And then I'm probably going to end up holding because I do think that, even if we look at what happened to Optimism, for instance, let's search up Optimism really quick. OP token, Rapid, USDC, there we go. Yeah, when Optimism first launched, it had a very big sell-off. Now, what we have to remember is that Optimism also launched at the worst time. It launched in June. But look at that recovery. So for instance, let me just do this. So you see, when Optimism first launched, yeah, it had a slight spike up, but then it, proceeded to dump 70%. But, if you bought it in the bottom there, it went on to rally, already a 4X at one point. It did, get up to almost a 7X. So kind of expecting Arbitrum to do something similar. Maybe it'll maybe it'll bottom out sooner, but Arbitrum as a whole does have a lot more per se volume. It does have a lot more utility. If we do look at the TVL of it, if we go to DeFi Llama, Arbitrum is at number 2 or 3. Sitting at number 4 in terms of TVL. So it's right behind Binance Smart Chain. And then as you can see, this has been their TVL the whole time. It's fairly steady. Got up to as high as about 3 billion. It's actually sitting at all-time highs right now for TVL. But then if we look at Optimism is just above 1 billion. And again, they had that crazy spike up at the end of July when they first launched. And as we can see, people cashed out and took profits. So that's why I think a lot more people are bullish on Arbitrum, and so am I. I'm actually using it right now on GMX, waiting for my short there to start going into profit. Got in a little soon, but yeah, I think things will be playing out here fairly soon. So we'll wrap up. We'll wrap up looking more at tokens towards the end of the live. So yeah, let's just dive into it, guys. So the economic report, I do highly recommend giving it a read when you do have the time, because it is quite lengthy. But like I mentioned, it does give us a really good perspective as to how the White House is going to be approaching the crypto markets, because the U.S. is the leading institution. The U.S. is the leading country in terms of crypto right now. Yeah, there's a lot of exchanges that maybe are not accessible. Other countries are a lot more friendly, but the majority of the volume, or I should say the United States does have the second biggest volume share in the cryptocurrency market. Asia is obviously number 1 just because they just have more people. It's as simple as that. But the US is number 2. And with the innovation, I think that the US could definitely take over, because they, for instance, do control the majority of the mining hash rate since, when China did ban Bitcoin mining back in the summer months. A lot of these miners, started to come to the U.S. and it became a lot more friendly. So I think the U.S. does understand their role and their stronghold in the cryptocurrency market, and that's why yes, the SECs are coming after Coinbase, which we'll go over as well. But they do know that they can make money off of this, because at the end of the day, for the government and the U.S., they just want to make money. If they can tax it, that's what they're going to do. So in here, they're just talking about, at least at the beginning right here, they're just talking about obviously some of the banking crises that have happened in the U.S. as a whole, and really how this has helped shape the current monetary policy in the United States. They even talk about how some of the crises that happened back in the early 1900s led to the creation of the Federal Reserve. So if you actually see right here, they're saying that this helped government policymakers realize that when faced with the crisis, the financial system as then constituted would rely on a privileged group of individuals seeking to maximize their own profits rather than on institutions that had an obligation to protect public's interests. And this, helped lead to the creation of the Federal Reserve, the centralized entity that first aimed to serve as a lender of last resort, and over time also obtained exclusive power to issue U.S. dollar notes and maintain the nation's monetary policy. And then again, they're just talking about, why the Federal Reserve was obviously created, what was the main reason for it. And then this is where things really start to get interesting. So here they talk about, DLT, which is distributed ledger technology, which is, how cryptocurrency operates, right? Not only Bitcoin, but pretty much every single crypto, consensus mechanisms, things like that. So again, they're just talking about the prequel, right? The prequel here as to, what they're going to be looking into. This was very interesting right here. So right here, before they kind of start getting into the negatives of it. So they said, in addition to decentralized custody and control of money, it has been argued that crypto assets may provide other benefits, such as improving payment systems, increasing financial inclusion, and creating mechanisms for the distribution of intellectual property and financial value that bypass intermediaries that extract value from both provider and recipient. So again, right there, they're talking about the positives that crypto can provide. Yes, we can agree that it can obviously improve payment systems. I guess you could say it does help a lot more people get financially included. There's not necessarily per se a barrier because anybody can't access it. That's always going to be like this. It's always going to be the reason the U.S. likes to, or the Democrats like to harp on. Oh, we got to include everybody. We got to include the minorities. It's like, guys, everybody's always included. I'm ready. Am I the only one? I don't know, Jack. I don't know. Maybe you are. Maybe you're not. But I appreciate you being here. So yeah, make sure. Is crypto dangerous? No, I don't think. I mean, it's dangerous if you don't have a strategy. It's dangerous if you don't have risk management. Yeah, if you just kind of gamble it, or if you treat it like a casino, then it's dangerous. But if you, approach it with a strategy, you actually plan out what you're going to buy, when you're going to sell it, you do your research, and it doesn't have to be dangerous. No. So. And here they talk about the perceived, appeal of crypto assets. They get into things like NFTs, stable coins. Stable coins is obviously a big reason why people did want to start approaching the crypto sector as well. And then this was very interesting right here. So they say the term crypto asset excludes digital currencies that may be issued by a central bank. Those central bank digital currencies might be designed to operate using DLT. There's no requirement for them to be on a DLT, and a central bank digital currency does not necessarily involve using DLT. So it's really interesting how they're saying that, okay, as we know by now, CBDC is going to be something that's coming in our future, right? We can't no longer deny it. But what's interesting is they're classifying it as a crypto, but it wouldn't be on a DLT, a distributed ledger technology, meaning it wouldn't be on a blockchain. So what that sounds like is they're going to try to program, CBDC to have the appeal and the operations of a crypto, like a regular cryptocurrency. However, it's not going to be on a blockchain. It's going to be on something entirely different because it's going to be something that the Federal Reserve creates. So this is where, me per se, at least, I try to really help people understand is that CBDCs are not going to be like just a regular cryptocurrency that everybody expects it to be. It's going to be something completely different because it's the central bank that's creating it. And then if you kind of look at it throughout history, whether it's now or in the past hundreds of years, name me a time when the government of any country got involved in the country's finances and in the issuance of money, where they took control. When was there a time where it ever ended up being good for the citizens? It ended up being good for people. History shows that it's not ever good. So this is why CBDCs are something to be very aware of, and something that you should, in a way, I don't want to spread fear, but you need to not be so open to it. Because right now, if you just look at what's happening in the world, it's all about control right now. It's all about control. I'm just moving the mic closer for as well. We're at a point right now where everything is being monitored, everything that we say, everything that we do. And by now, they have so much data on all of us, they can predict what we're going to do before we even think about doing it, which is very scary. Now, China already does have a CBDC. They have something known as a social credit system, and it ain't looking too good. Basically, if you do something that the government doesn't agree with, if you do something that's not really for the good of society or people, you lose a lot of perks, you lose a lot of benefits. They start taking away access to like internet, right? Or they slow down your internet. You might not be able to take public transport at certain times of the day. There's been videos where they put like the picture of, somebody who has a low credit score, social credit score on like, the bus's intercom system. So people see like, oh, like this person, like they're doing something bad, like don't hang out with them. Like that's really scary. That's the type of world that we're living in right now. And CBDCs are going to be something that's going to power that. He's got a little burp going. CBDCs are going to be something that's going to power that, because money controls everything that we do. It controls every single decision that we make, and it controls every single thought that we pretty much have. And I know that we all want to say that, yeah, money doesn't control us, but it does. Everything that we do right now in this life is mainly because of money, right? Why do we try to move up in our job? So we can make more money. Why do we try to learn a new skill? So we can make more money. Why do we invest in crypto or stocks? So we can make more money. Why do we, buy something that we think is going to appreciate over time? So we can make more money. Everything that we do in this life is because of money, because it does control every single one of our decisions. However, it doesn't necessarily have to be a bad thing, because you can use it as a negative to have money control you, or you can use it as a positive. So it depends on how you want to look at it. And then in here, they're just talking about obviously how crypto just had, a crazy run up during COVID. It hit the market cap of about $3 trillion. And then, here, this is where they mentioned that, okay, back in March 22, President Biden signed the executive order, which tasked the administration to study the effects of these novel assets. And as a result, departments and agencies of the federal government have produced 9 reports examining implications of crypto assets for consumers, businesses, financial stability, national security, and physical environment. Now, I was actually really impressed with their, deep dive of Bitcoin. It actually shows that they did a lot of their research. And in this, in this report, they do a very good job of breaking down, like, what is money? Like, what is the function of money? So to be honest, this report is very impressive. They talk about the use cases of money, talk about sovereign money, which is money is issued by governing authority of an independent country. Sovereign money can easily satisfy money's functions to serve as a medium of exchange and as a store of value over time. So if you guys don't really understand money that well, I would, like I said, give this report a read, because it's very impressive what they came up with in here. And then in this whole section on Bitcoin, they talk about, again, how it works, how it works peer-to-peer. There's no centralized trust authority. Works on, again, a DLT, works on, again, based on trust, that has a blockchain, it pays out things in reward. They did very good, research, or whoever did their research on cryptocurrency did a very good job. Here they're talking about, obviously, how crypto is being used as an investment vehicle. I mean, the overall gist here is they just see it as a speculative asset, right? They only see it as, okay, like, crypto it's still very brand new. And, compared to the assets that we have right now, there's no like utility for it, right? People just invest into it based on the speculation of what the price will be one day. And that is true. The only crypto that really does have utility, or cryptos, is obviously Bitcoin and Ethereum. But besides that, every other altcoin that we buy, why do we buy it? Because we buy it, we think that's going to be worth some crazy price, in the near future, right? Maybe in like the next 2 or 3 years, it's going to go up like 5,000%. We're going to make a lot of money. So that's kind of the main point that they're trying to make there. And then in here, they're talking about how crypto, could offer money-like functions without relying on a single authority. So they're talking about, like, crypto is censorship resistant. Again, we don't need to go to like a bank or some sort of like a managing party to basically tell us, like, what we can do or can't do with crypto. If I want to send it across the world, I can send it, which is a lot of the things that we already know. Now, they are aware of the fact that, crypto is being accessed as a means of digital payments. So they talk about here how, in the recent years, the use of cash has declined dramatically as the usage of digital payments has increased substantially. And let's be honest, the only time that I've actually ever used cash recently is maybe like if I went to like some sort of event and you have to park outside and you have to pay for parking, right? Because it's, they took a whole like section of a lot and they're like, yeah, we got to park cars here, you got to pay cash. That's really the only time that I've used cash. Besides that, everything is digital. The other day I went to a food truck and, they were like, yeah, we either pay cash or Zelle. And I was like, okay, I'll just do Zelle. That's the thing, is like, we don't really ever use cash anymore. Everything is going digital. That's just how the world is moving at this point. And they're seeing an uptick with it, being, debit and credit cards as well as other forms of payment, which is crypto. And again, we're seeing more and more businesses adopt, crypto as a form of payment. And then now they're starting to talk about stable coins in here, which is, something that we do need to be aware of. So this is actually very interesting. As of December 22, so not that long ago, there was about 200 different types of stable coins, right? Outside of USDC and Tether, like all these different algorithmic stable coins and stuff like that, with an estimated market size of roughly $140 billion. The two crypto assets, Tether and USD Coin alone, accounted for roughly 80% of the total market of stablecoins. And since stablecoins try to be pegged to a reference asset such as the US dollar, proponents argue stablecoins could eliminate exchange risk when used as a settlement method. That is, if one stablecoin is always worth $1, then an individual using a stablecoin to buy or sell goods has the expectation that its nominal purchasing power will not change dramatically after the transaction. And stablecoins have been suggested as a possible way to simplify cross-border trades, transactions, and remittances. So that right there basically destroys a whole entire narrative for XRP. Sorry to break it to you guys for XRP people, but yeah. Let me, I'm actually going to screenshot this because, yeah, this basically just destroys the whole entire proponent for XRP, which is wild. Let me just do this right there, boom. Because XRP people love to harp on how it's going to be used to, cross-border transactions and remittances, but stablecoins basically destroy that narrative. Claim crypto assets can increase financial inclusion. So this is where they're talking about, the Black population where, a lot of these people, they're unbanked, they don't have access to a bank, and, crypto can solve it. I mean, it's not necessarily in the Black population, it's any population. That's the point of crypto. It's financial inclusion. Everybody's going to have the same ability to access and trade cryptocurrency from wherever they are. It doesn't matter their, race, their sex, their ideology, religion, things like that. It does not care. It just cares about operating and spreading, financial inclusion across the world. Crypto assets can improve the United States government current financial infrastructure. So again, this is where they are talking about, DLTs, distributed ledger technology. And this is where things actually got very interesting. So let's give it a read because, like I said, a lot of the stuff they talk about is, in a way, very bullish. And they do talk about the risks and the threats they can pose. But overall, they're looking at DLTs and actually smart contracts. So let's take a read. The distributed ledger technology that underlies many crypto assets is based on a number of technological advances. It addresses the problem in certain circumstances of establishing trust and a consensus on the true history of transactions among a group of mutually suspicious parties. It is effectively a shared database whose contents can generally be trusted, even though it is operated by entities that generally do not have a reason to trust one another. For crypto assets, the database stores the set of transactions that have occurred among network participants. In addition, more recent developments in DLT have enabled new features and improved efficiency, such as smart contracts, which automatically trigger particular actions without the need for ongoing oversight. And then, box whatever describes how Bitcoin and DLTs work. So, everybody can obviously take a read in here, which again is actually very impressive how they've done a lot of their research. And again, their main thing that they're harping on here is just crypto is very speculative. It's not like something like a bond where, you're buying a debt and that the government's going to pay you back, or not something like gold or metal where, it's per se a lot more stable, or it's something that's just a lot more predictable in terms of its price and its adoption. Just crypto is just still so speculative that, again, that's kind of what's leaving a sour taste in their mouth. And now this is where things did start to get slightly negative. They said cryptocurrencies generally do not perform all of the functions of money as effectively as sovereign money, such as the US dollar. Now, if we really take a kind of an outside look out of it, what they're trying to do here is they're trying to downplay the power of crypto and say, hey, don't really, focus on this crypto stuff. It's not really just like our dollar. You're better off using our dollar because why? They don't want the USD to lose its, dominance. They don't want it to lose its purchasing power. They don't want the dollar to lose its place as being as a world reserve currency. Imagine a world where Bitcoin takes over or a stable coin. Now, granted, that stable coin will probably be pegged to the dollar. So I think that's how they can approach it, is they could, have a stable coin that is still the world reserve currency, and it's in the crypto space as well, which a lot of people are going to like. Coffee break. That's good stuff. How you guys doing there? Jock, you still in here? How you doing in the chat there, man? Is everything kind of making sense? You want me to go over anything again? Slow down, maybe? Let me know. Let me know. And then they, like I said, they break down the properties of money. So they say the first monetary function equation is cryptos can serve as a unit of account given relative goods and services. The second is whether cryptos can serve as a medium of exchange. Obviously, we know that it can. And then the third, cryptos currently experience substantial amounts of volatility. So that's really the only downside right now, is that crypto is extremely volatile. If we do take a look at Bitcoin, for instance, I mean, just take a look at this as an example. Is this is a very volatile asset because, you can have something like Bitcoin do a 6x in a matter of 2 years, but then literally the following year, it can go and crash 70-80%. That is pretty volatile. If we're talking about something that's supposed to be stable and secure, it can't have these types of crazy swings. But what they're failing to address and mention there is parabolic returns, as well as the law of diminishing returns, is that over time, as crypto grows, as crypto gets adopted, it is going to basically become a lot more stable. You're not going to have the crazy swings, the crazy rips up, and then the crazy crashes. But in the meantime, as it's still kind of finding its foothold, it's going to take some time, and unfortunately, there's going to be those. There's going to be those crazy swings that do happen. And then there's also tension in an asset being promoted as both money and an investment vehicle. As money, the instrument should have a stable value, suggesting limited price volatility. But as a risky asset, it should experience price volatility, for which an investor would be compensated with a high expected return. Holding everything else constant, the riskier an asset is, the less likely it is it can effectively serve as money. In addition to generally being speculative assets, cryptocurrencies currently are not effective alternatives to sovereign money, such as the US dollar. So again, their argument there is they just don't want crypto to replace the US dollar. That's all that it can be. They had a whole section on stable coins, talking about the whole run risk, the run on stable coins where, hey, look at what happened with Terra Luna, for instance. They actually had a whole research on it. So they were even talking about, a stable coin like UST, which is really impressive. And they did a really good explanation of it. They said, hey, Luna was supposed to be pegged to, or UST is supposed to be pegged to $1. There was actually an arbitrage opportunity where, if one UST could be traded for, if one UST was below $1, you could trade in your Luna for it. You'd be paid out UST, things like that. Tokens were supposed to be burned. There could be a mint as well. And then obviously, they even mentioned something like Anchor Protocol, where, people could access a smart contract lending protocol and, and a promised a return of about 20% on their investments. And then eventually a run occurred as a few major withdrawals in May 22 knocked UST off its $1 peg, leading to stampede out of Terra into Luna, suppressing Luna's value and ultimately causing a total crash of 2 cryptocurrencies. And then, another thing to talk about is some of the redemption risks that are associated with stablecoins. The fact that, hey, if things do get bad enough, like we had a run on banks, that some of these stablecoins, they might not be able to redeem all of the assets. So for instance, like USDC, right? That was a really good example. Once Silicon Valley Bank went under, well, USDC, they had like $3 billion that was actually locked up there, or that was, exposed to USDC. And then what happened? USDC actually dropped in peg, right? It went down to like 88 cents. Obviously regained it because they said they're going to use, company funds to fill in that hole. But they're just saying that, hey, even stablecoins, they are going to be prone and they're going to be exposed to basically having a bank run as well, whether it's a stablecoin like UST where it's algorithmic, or a stablecoin that, has one-to-one reserve ratios with like treasuries and bonds and cash itself. They're saying that, hey, like, just don't think that stablecoins can also, be as quickly redeemable as they are proposing it to be. Is that they are also still exposed to the same bank run risks that a traditional bank, is exposed to. However, the scary thing is that stablecoins don't have any insurance. So for instance, at least with a bank right now, we know that you have FDIC insurance. So if you have less than $250,000, you're going to be able to access that, or you're going to be able to get that money out no matter what. Stablecoins, you don't have that guarantee. You don't have that guarantee where, okay, if I buy this stablecoin, no matter what happens, I'm going to be able to redeem it. The only guarantee that you have is that, well, there is no guarantee. Like, you might be able to send it on an exchange, or that they're going to have the reserves to at least, pay you back. But even then, they can halt trading. What happens if the peg loses, right? Let's say the peg goes down to 95 cents. Are you willing to take a 5% loss on it? Probably not. Now, I didn't really get into this stuff right here. Crypto assets can be harmful to consumers and investors. Let's see if we could read about it in here. Oh, so what they're talking, yeah, so actually I did read this. So in here, they're talking about the crypto marketing, the crypto scams that would go on. Israel, come on, Marty, let's go party. Dude, I'm partying. I'm so ready to party. Yeah, we're partying right now, man. We're reading the economic report. That's the party that we're having here on a Friday. So this also shows that the US and the government, they're very well aware of all the marketing that tends to happen in the crypto sector. They talk about here how between October 2020 and May 21, more than 7,000 people reported losses from these scams, which totaled more than 80 million with a median loss of 1,900. One particular type of scam identified by the FTC is giveaway scams, where promoters claim to instantly multiply a given number of crypto assets, but instead appropriate the crypto assets upon a receipt. According to the FTC, young people were most susceptible to this fraud. Between 20 and 39 years of age, lost far more money to investment fraud than any other type, more than half of which was attributed to crypto assets. So that's kind of scary as well. The fact that, not only are they already, understand the potential risks of crypto, but they're like, hey, way too many people are losing money through these scams. And then November 2022, the Consumer Financial Protection Bureau released a bulletin summarizing the consumer complaints it received. It looks like from 2018 to 2022, they received more than 8,300 complaints, with the majority received in 2020. In this period, roughly 40% of crypto asset complaints handled were primarily frauds and scams. Transactional issues with crypto assets and issues with assets not being available when promised made up about another 40% of complaints. And then other risks included pig butchering, which is difficulty obtaining restitution and fraudulent transactions. And then, they're saying there could be a lot of conflicts of interest. For example, some crypto asset platforms combine exchange, brokerage, market making, and clearing agency functions. This vertical integration of products and services has long been prohibited in traditional markets and leads to risks to customers. So now what they're talking about here is FTX. Interesting, huh? So again, this is why they've done a lot of this research. They see a lot of the problems that they've been having. And now they're talking about FTX here. Let's take a read. FTX, one of the largest crypto asset platforms until 2022, reportedly transferred billions of dollars in customer accounts to its affiliated trading firm Alameda Research. By borrowing against FTT, the native token of FTX, Alameda Research reportedly made risky bets and lost a large fraction of FTX customer funds. In November 22, FTX and its affiliates declared bankruptcy, and the price of FTT posted massive losses. At this time, it is unclear whether FTX customers and creditors will get their funds back. So, another reason why they're a little bit skeptical, because there's so much of this commingling going on. Like at the end of the day, a lot of the stuff that we see on social media with like, oh, proof of reserves, oh, we're super transparent. Okay, we get it. But all that you're really showing is that you have this money in your exchange. You have this money in the back end, so you could redeem it. We don't know what they're doing with this money. So just to kind of, beating a dead horse, because, me and Alex have talked about this multiple times, and so has Alex. He's even talked about it. But when you leave your coins in an exchange, it's just the same thing as like a bank. When you leave your money in a bank, what does the bank do? They go and give that money out. They lend it out because they're going to make way more money lending that money out and charging interest on it than you leaving it in there and them paying you 0.015%. They make no money with your money staying in a bank. They have to do something with it. They have to keep it moving. You know that it's like that old adage, like, you got to keep your money moving because that's how money makes. Money doesn't like to stay still. Money likes to move around. So that's how banks make money. And it's the same way that exchanges make money. They don't make money by, you just leaving your coins on there. What do they have to do? They have to go lend those coins out. They have to go provide collateral, right? They have to go take on these risky bets. They go trade on these over-the-counter markets, okay, over-the-counter exchanges. That's what they do. That's why FTX went under. They went and made all these crazy bets. They lended it out to all these other platforms. They tried to bet on, all these other coins going up in value and whatnot. And what ended up happening, it blew up in their face. So, for instance, Binance US is a really prime example. Binance US right now, they have, this is US, not .com. So Binance US, they have about 27 coins right now that if you leave on their platform, you will generate an APY. So let me actually log into my Binance US so I can show you here, guys. But this is actually kind of a little bit worrisome. So let me I just got to put in my authenticator here, guys. 1 second. 71286. How's everybody doing, guys? We got 5 people in here. I like it. Like it. Stake now. So let's take a look at how many cryptos they offer to stake. Look at this is still on Binance US. Remember, what did the SEC just hit Coinbase with? Staking services. So I have 1, 2, 3, 1, 2, 3, 4, 5, 6, 7, 8, 9. So I have 27 different cryptos that they offer staking services on, and some of them can be quite high. I mean, for instance, Kusama 9%, LPT almost 10%. Audius at one point was at 13 or 14%. I guess they dropped that down. 7.5% for Atom. So yeah, they are still offering staking services, and this is Binance US. So I think that Binance US is probably going to be the next one to kind of get hit, with maybe like a Wells notice. But yeah, a lot of these exchanges are still commingling funds, and again, the government's very well aware of that. There have been limited economic benefits from DLT technology. So I guess here they're talking about how like there isn't per se that many benefits of maybe being in crypto and stuff like that, which again is obviously untrue. When it comes to the trustlessness of blockchains, Schneider notes that a blockchain does not eliminate the need for trust, but simply shifts trust away from individuals and institutions to a technology, along with all of its features and bugs. James Mickens, a leading computer scientist who studies distributed DLT, stated in addition to not actually being decentralized and trustless, blockchains are often a very poor fit for perpetuated use. This is primarily because the instant that the identity of a person or firm is needed, existing technologies can solve the problem in a much more efficient way. For example, many of the cybersecurity benefits of an immutable DLT can be replicated through existing features like tamper resistance and non-repudiation. A receipt of a sender of information is delivered to both sender and receiver information. Proponents of blockchain tech claim that it will not only improve firms' performance, but also be the backbone of an entirely new internet, Web3, that is the so-called new internet. Purports to retain all the privacy networking benefits of the earliest versions of the internet that existed. So they're basically just trying to discredit and debunk how DLT doesn't really work all that well. Web3 is not really going to take over the new internet, and that blockchains, like, they're not as decentralized as people think. Like, it just basically shifts it away from an institution or a company to something like like a technology and things like that. The risk of financial innovation. So this is where I just completely disagree. I mean, I think we can all agree that crypto is extremely innovative, right? Crypto is extremely innovative. It changes everything in the crypto markets. It changes everything in the monetary world. So for them to say that there's no innovation is crazy. So while the crypto asset ecosystem and its underlying technology introduced a potential for newfound efficiencies, efforts to challenge basic economic principles have frequently resulted in financial calamities. The economist Hyman Minns hypothesized that financial crises often follow a similar cycle whereby initially strong investments turn increasingly more speculative until a bubble bursts. Further, Minsky stated that this repeatedly happens because regulators are initially vigilant in the immediate aftermath of a crisis, but as time goes on and the instrument of speculation changes, regulators take a less prescriptive approach to non-harm innovation. According to Minsky, this relaxed regulatory environment invariably leads to another crisis. Indeed, other economists have argued that the most effective financial regulation has been introduced only after a crisis has occurred. Minsky's theories became popular in the aftermath of a global financial crisis when complicated financial products involving mortgages that exacerbated the crisis were initially hailed as innovative, and individuals discussing their risk were labeled Luddites by prominent commentators. So the gist there is they're saying, okay, the innovation, it's the innovation is hyped up right now because there hasn't been a crisis. But then they're saying that when basically the music stops, right, when the musical chairs is over and there's a crisis that happens where the bubble bursts, way too many people lose money, then kind of the dust settles and people are going to be like, well, it ain't really that innovative. It ain't really all that exciting. It ain't really worth it for us to put money in that. Again, what they're trying to do here is they're trying to downplay crypto. They're trying to downplay the power of it. It's as simple as that. If they did not see all the powers that it holds, all the innovation that it has, Why spend a whole year researching it, literally making an executive order? Do you guys understand what an executive order means from the president? Do you know how many tools and resources get allocated in an executive order, especially when you're looking into a financial market? A lot. For the past year, guys, they've been studying the crypto market. For them just to come out and then say that, hey, it ain't innovative. Hey, ain't that exciting? Hey, but we're not threatened by it. We don't care about it. If they thought these things and they truly believe them, why spend a whole year researching it? Anybody want to let me know in the comments? Why allocate all this time and effort to research to then just be like, yeah, it ain't really worth it? Because they're trying to downplay it. They're starting to see this shift. They're understanding that people are like us, we're waking up. We're not buying into the whole crap of, hey, we're going to go to banks. Hey, we're going to buy treasuries and bonds. We're going to go get some crypto. We're going to go buy some Bitcoin. Yeah, it's volatile, but I'm going to stomach the volatility because I know if I buy it now, probably in the next 2 to 3 years, I'll do a 6x. I could put my life savings in there. Not that I recommend it, but put my life savings in there and I can make a hell of a lot more money buying and trading crypto and investing in it than buying a CD, a money mutual fund, a bond or a treasury. Just my 2 cents. But let's wrap it up. Other risks from crypto assets, leverage risks. So yeah, I mean, there's obviously a lot of leverage that happens in the crypto markets. Let's see what they say here. Crypto asset derivative platforms where investors can buy and sell financial derivatives linked to crypto assets have seen substantial growth. Table 8.1 shows the top 10 platforms for crypto asset derivatives, which account for roughly 76% of volume in these derivatives, have over 47 billion in open interest and roughly 91 billion in daily trading volume as of January 2023. That's pretty crazy. According to one international regulator, one of the largest platforms, Binance, refuses to provide adequate and reliable information in response to regulatory requests. Ooh. They want their piece of the pie. Yep, they most definitely do. Why do you think they're making the CBDC? There you go. They're specifically calling out Binance. Exchanges frequently tout the high amount of leverage they offer clients. Sitting investors can take up to 100 to 1 leverage, debt to equity. These derivatives platforms can create financial instability because positions with high leverage can amplify a shock to prices of crypto assets. In particular, leverage leaves little room for prices to fall in a short amount of time, as steep price declines could induce brokers to issue large margin calls, thus forcing broader liquidation. So that's true. I mean, the way that leverage is, being touted right now, it's very scary. Now they're getting into DeFi here. Here we go. This is very interesting. Buckle up. Relative new application in DLT, known an unleveraged is so-called DeFi. DeFi attempts to offer financial products such as loans on blockchain through the use of smart contracts. The basic promise behind DeFi is to replace financial intermediaries. Though DeFi applications claim to help broaden access to credit by decreasing intermediation fees, they create serious risks to investors and cause at least 2 risks for the broader financial system: the use of significant leverage and the performance of regulated functions without compliance without appropriate regulations. Furthermore, DeFi presents the opportunity for synthetic leverage, whereby the investor can mask the true amount of leverage they are undertaking from the party from which they are borrowing. If DeFi were limited to small retail investors, the failure of DeFi platform could help hurt these investors, but the shock could be relatively contained. Banking agencies issued a statement that expressed concerns with business models that are concentrated in crypto asset related activities or have constituted exposure to the crypto asset sector. Now, let's again put on our thinking caps. How many DeFi platforms have went under because a lot of the users became over leveraged and the DeFi protocol platform itself took on too much risk and they went under? I have yet to see a DeFi platform do that. The DeFi platforms that have went under are the ones that have been hacked, right? Like a bridge hack, or just an outside party, tried to attack the overall DeFi protocol and see all the money through a smart contract. I have yet to, MakerDAO and Aave have been running seamlessly for the last 5 or 6 years. Yes, they have, margin calls, right? If somebody's not paying back their loan, but I have yet to specifically see a DeFi platform go under because they just went and gave out way too much yield, or they just gave out way too many loans. I've yet to see that. If anything, I'm seeing a lot of these DeFi platforms actually continue to operate smoothly. That's very interesting to me. That's very, very interesting to me. How many banks have went under in the last couple of months? I mean, we're seeing what Deutsche Bank going under right now. Let's take a look. Another bank is going under right now. Deutsche Bank right here on Twitter. So they're trying to, again, Deutsche Bank stock is down under 11% today. Largest bank in Germany has deposits of over $665 billion. So a bank that's almost, it's got over $500 billion in deposits is struggling, and it has a crazy amount of regulation. It has a crazy amount of funding and backing. So that bank going under, and we're just hearing news about it, but hey, it ain't threatening nobody. But a DeFi protocol is supposedly going to threaten somebody. Do you guys smell the bullshit? You smell it? Yeah, smell it. It don't smell too good. It smells like a lot of BS to me. It's really sad. I know the whispering sounds weird, but I had to do it. So yeah, I ain't buying it. I'm sorry, I ain't buying it. If DeFi were limited to small, so we just read that. Price volatility, most crypto assets experience substantial price volatility. Okay, I mean, what about some of these bank stocks that just fell like 30, 40%? Currently, this contagion risk is relatively muted, given that banks are limited in their ability to conduct crypto-related activities, such as acting as custodians of crypto assets. Indeed, banking regulators such as the Federal Reserve have issued guidance requiring regulated financial institutions to inform their regulator before engaging in crypto asset-related activity. But other less regulated financial institutions such as hedge funds are increasingly investing in crypto assets. Such activity of lightly regulated or non-regulated entities can lead to liquidity spirals as described by Brunermeyer and Peterson. These spirals occur when dramatic crash in price at the price of an asset, such as a crypto asset, leads a hedge fund to be margin called, requiring the fund to sell off large positions. Illicit finance risk, crypto assets are the standard of payment extorted from victims of ransomware. So they're talking about all the hacks that tend to happen. Crypto assets remove a critical friction in performing ransomware hack because the attacker can demand that crypto assets be sent to pseudonymous wallet instead of a bank account linked to specific person. Attackers can more easily launder or obfuscate payments made to them in comparison with fiat currency. So that's where they're wrong. This is where they're wrong. Because yes, in a way, it is, let's see, Binance halting withdrawals according to Twitter counterintuitively makes me think we're looking at a pump soon. Yeah, apparently they had like some sort of issue with like some of their software, so they just halted trading. But with this, I have to disagree, because they're saying that it's easier for a hacker and attacker to steal money and run away with it. However, what does a blockchain do? What is like one of the core concepts of blockchain? Is it's immutable. Is that you cannot change a transaction. There's a reason when, for like, who watched Ozark, right? Why do people try to money launder cash? Because it's going to be a lot easier to hide cash by going through things like, making a different company. It's easier to launder cash than it is to launder cryptocurrency, because you can track every single crypto back to its original address. That's what you can do. Now, the only downside of it is because crypto does have anonymity, it can be a lot more difficult per se to figure out who is that person. However, because of crypto and blockchain and DLT, you can track every single transaction, every single move that crypto or that amount ever made. So for instance, we have this person on Twitter, ZachXBT, where he's been able to actually track a lot of the scams that have happened. Or better yet, when Axie Infinity got hacked, right, the Ronin bridge, they were able to figure out that it was North Korea that did this. And they were able to do that in a very short period of time. It only took them a couple months. How long do you think it would have happened if, let's say, that type of attack or hack happened to a bank? How long do you think that investigation would go on? It would go on for multiple months, if not multiple years, because they have to look at all these balance sheets and what happened and what does this business do, things like that. Crypto, you don't have to do that. If you can just learn how to basically navigate Etherscan or Blockchain Explorer, you can literally, with some time, figure out from where this transaction originated from to where it ended. And better yet, if they catch it early enough, they can let an exchange know saying, hey, this hacker just sent $1 million worth of USDT to Binance. You need to halt this address from cashing out and withdrawing. And they can do that. Actually, Binance did that multiple times. So that's where this is where I disagree with them. I mean, you can't be saying that, illicit finance risk, like, yeah, bad actors are going to be in the space, but they're also, it's a catch-22, right? It's a double-edged sword, because they're doing illicit activities on a platform and then on a network that literally tracks every single transaction. It makes no sense. So yeah, so just talking about all the ransomware that's happened. Looks like there's been about, wow, $20.5 billion worth of ransomware. It's pretty scary. It's a lot of money that's been lost. Um, In addition, paying for ransom costs, companies affected by ransomware attacks typically are unable to maintain their business activity until they've made payment. It is the annual state of ransomware. So wow. So as a total, a lot of these, Eddysoft estimated the combined cost of ransom payments and business downtime to be, $20 billion in the United States in 2020, and roughly 51 billion across the United States, France, okay, and all these other countries. That's kind of scary. $20 billion worth of ransomware has been paid out. And here we go. Now they're wrapping it up. So this is where they're getting into things like, FedNow, CBDCs, so investing in nation's digital financial infrastructure. The FedNow instant payment system, in terms of overall value, the largest retail payment system in the United States was the automated clearinghouse. So we're talking about ACH deposits. Advances of technology create opportunity for significant improvements. In response, the Federal Reserve has prioritized designing and developing a faster payment system. The Federal Reserve plans to launch this new system, which is called the FedNow Service, later in 2023. Through financial institutions participating in FedNow, businesses and individuals will be able to send and receive payments conveniently, and recipients will have nearly instant access to funds, giving them greater flexibility to manage their money and make time-sensitive payments. The service will be operational 24 hours a day, 7 days a week, so like a blockchain. This is uninterrupted processing of fund transfers, is an important improvement over existing payment systems, because ACH right now, you can't do it on Marty did FS fire all their coaches except Zong. So like me and Johnny still aren't on FS. Yeah, I think it's just mainly Alex right now. Yeah, it's kind of like a one-man show in a way. So this is really cool. So they're going to be at least updating the ACH, because ACH really works only during the week. And during banking hours, so like from 9 to 5. So now FedNow will at least solve that by being 24/7, but it's just, the prequel to them doing a CBDC. For example, funds transferred via FedNow will be available more quickly than those that must first exit a peer-to-peer payments service and then enter ACH banking transfer process, which can take time to settle. Beyond speed and convenience, near instant payments can yield real economic benefits to both individuals and businesses by allowing them to make time-sensitive payments, blah, blah, blah. So they're talking about FedNow, and they're saying how it's obviously going to be instantaneous. CBDCs right here. A CBDC system is made up of CBDC itself and private sector components. That says certain design. So as of January 5th, 2023, 11 countries have launched CBDCs. In addition, a number of foreign banks, including the ECB and Bank of Japan, are exploring CBDCs, and some central banks, like People's Bank of China, are piloting a retail CBDC. While some countries have considered using DLT for their CBDC, it is worth noting that many of the pilot programs for the CBDCs are not built on DLT. Instead, they rely on a trusted central authority, the country's central bank, to operate key aspects of the CBDC system. This seems likely to be the case if the US CBDC is introduced. A White House assessment of a potential CBDC system recently noted that while a US CBDC system could, in theory, be mostly permissionless from a governance standpoint, this design choice introduces a large number of technical complexities and practical limitations that strongly suggest a permissionless approach does not make sense for a system that has at least one trusted entity, the central bank. This is somewhat ironic, given that this is different from an oft-cited founding principle of crypto assets like Bitcoin, whose perpetrated aim was to create decentralized money without any trusted central authority. So again, they're saying that while a CBDC would be nice in theory, they won't be able to make it per se permissionless, because it's going to be too complex. And why is that? Because they can't control it. They don't have control then. If they make it permissionless, they can't control what happens to that CBDC. What do we know? The US controls everything, or central banks, they like to control money as a whole. They like to control money as a whole. A US CBDC, a digital form of the dollar, would have the potential to offer significant benefits. It could enable a payment system that is more efficient, provide foundation, blah, blah, blah. They're trying to sell you on it. A potential CBDC could support policy goals. It could help ensure that such payment systems are aligned with the principles of human rights, democratic values, and privacy. Stop. So they kind of slipped up there. So they said that a CBDC could help ensure that such payment systems are aligned with principles of human rights, democratic values, and privacy. So what are they really trying to say there? they're saying that this CBDC, it will only work if you basically are upholding and adhering to certain values, principles of human rights. Okay, yeah, obviously we don't want people struggling, but this becomes a very gray area. What if you say that you dislike somebody? They might say, hey, that's a violation of human rights. You can't use the CBDC anymore. You see how deep it goes? It goes quite deep. There are some risks from having a CBDC in financial system. CBDCs may also pose credit availability risk. Okay, fair enough. Banking expenses. So that's kind of it. That's pretty much it. I think this chapter 9 go into it. Yeah, they're just going to climate change. So yeah, that's pretty much it. In addition, let's see, CBDCs could cause operational risk. If the CBDC platform cannot function due to system failure or cyber attack, it could erode investors' confidence. So there you go, guys. It is somewhat bullish because they do want to use Fed now. They do want to make DLT. However, they are trying to downplay crypto, which, as we know, they can't do that. Now, let's take a look at crypto and Bitcoin. So Bitcoin here on the daily, we'll wrap it up here, guys. We've been live for actually, wow, almost an hour. Guys, make sure you smash that like button. We got 10 likes. I like it. That's some dang good coffee. So yeah, still rejecting that 28K level. The longer we keep on rejecting here, the more probable we're going to see this, downfall here. RSI is starting to kind of trickle back down. Let's take a look at overall. Yeah, Hex is down 16%. Yeah, that's crazy wick, man. Look at that thing, almost up to $1. But yeah, assets are selling off. Let's take a look at some bonds. Let's see how the bonds are doing. Let's see the 1 year 4.2%. So kind of selling off there. Maybe building some support. I could see maybe come down to 4% before maybe pushing back up. That's the 1 year. Let's take a look at see the monthly. Where are the months? Let's see. Let's get the 2 year. Yeah, so bonds are kind of coming down again. 3Y. Yeah, so all of the 3 year kind of went up a little bit, but yeah, bonds as a whole definitely took a little bit of a tumble there from Jerome Powell's speech, just because he's basically saying that inflation is going to take a little bit longer than anything else. Is FS a one-man show, or are you and Johnny just another face in the crowd and no longer coaching this group? So, I mean, Alex is mainly running everything by himself. I told him I'm still happy to help. That's why, I'm doing a live stream. Johnny's kind of taking a break from crypto, I guess. He's just kind of figuring some things out. So yeah, that's kind of really it. Yeah. Are you in the group, man? Make sure you join the group if you're not in it. Join the free group, the Quimpix school group. So yeah, bonds took a bit of a tumble. Let's take a look at gold. Gold is kind of still hitting that triple top. Yeah, we'll see. I mean, this is the third time that gold's trying to break through here. It would be nice to see. And then let's see, VIX is having a bit of a spike up. It's because of the Deutsche Bank news. So still, I mean, this is starting to kind of change trend here, forming higher lows and higher highs slowly. You joined today? Okay, nice, man. Congrats. You joined the inner circle or just the regular Quimpix group? Which one was it? Ethereum took a bit of a tumble. Yeah, Ethereum kind of might be a good short in Ethereum here at the 1800 level. Spiked up to 1860. So, okay, yeah. But I'm in FS still. Okay, gotcha. But I'm in FS and still trying to join the actual FS. Okay, yeah. Make sure you get transitioned over. There's a lot of stuff going on there. I posted the that report. What don't you understand? What don't you understand, brother? I'm trying to go from Discord to school. Yeah, Bailey just made an announcement in you look right here. Come on. Man, freaking thing is lagging. When this thing lagging, Yeah, if you go to Zoom in announcements in Discord, Bailey just made the post. So yeah, click to join that link and yeah, you'll get approved. It might not happen instantaneously is all. Yeah. Glad you see it. And let's take a look at the dollar. Yeah, dollar kind of sold off there. Maybe we could have a little bounce, little W bounce here. Maybe something like that on the dollar. Hate that this does it like, yeah, maybe something like that on the dollar, a little W. Yeah, exactly. Yep, just follow that link and you'll get you get set up. Let's look at, and then let's just finish looking at ARB token. You guys got any tokens you want to take a look at? Let me know if there's any tokens you guys want me to take a look at. 30 million liquidity is pretty good for Arbitrum in this airdrop. Oh, because why does it show like that? It's weird. But guys, I'll be wrapping up here. I'm gonna wrap up looking at some news and see what's going on with CNBC. Probably just the Deutsche Bank thing. Yeah, Deutsche Bank shares slide 11% after sudden spike in cost of insuring its default. So yeah, that's kind of why the markets are going to be sliding today. JP Morgan defends Deutsche Bank, says market getting it wrong. I mean, all these banks are going to be backing each other now because they don't want to run. They don't want to run on banks. And then, yeah, so for those of you that don't know, Coinbase got hit with the Wells notice. They have a top 10 list of coins you plan to buy and hold until the next bull run. As of now, yes and no. So, I mean, the top 10 is going to be a lot of the coins that, we've been hearing about, obviously Ethereum, Cardano, Atom, basically everything that is in the top 10. That's what I'll still be looking at, just because, again, the way the crypto markets are set up, it's looking a little worrisome out there. ARB is one of them. Arbitrum is definitely one of them. Because, if they do come out and say that everything is a security, it's not going to be good. You're going to start seeing a lot of these coins selling off. So, yeah, that's kind of my approach. I'm not looking at any of the meme coins like Shiba. Chainlink will still be a good one. It's obviously needed for oracles. And then, yeah, everything else is everything is still very speculative. That's the problem. Arbitrum moved up to top 35. Crazy. 1.7 billion market cap. Nice. So, yeah, that's kind of my approach with it. I think that'll, I just don't, the only thing you should be looking to buy and hold for the next bull run is like Bitcoin, Ethereum. That's really it. That's really it, guys. Just because everything else is speculative. Maybe Cardano too. That's about it. Everything else is just too speculative. I mean, I'm sure a lot of people thought that, Luna was going to be something to buy and hold until the next run. There's like a lot of gaming tokens out there. If you're going to be looking to buy and hold anything, I mean, it should be something very, very foundational, something that's like creating a launch pad, something that's like, it's going to have to be used in a certain niche or sector. So like in gaming, for instance, like Engine is like a good coin to look at because a lot of ICP. So I don't know much about ICP. What I do know is that ICP is a very long-term play because it's literally like the computer of the world, right? Internet computer. So from what I've gathered, I just don't know the technicalities of it because this also isn't the best looking chart because I think what happened was a lot of the early investors, they cashed out early because they knew it's going to take a very long time. And that's why price has just been plummeting. It almost looks like a rug pull. It almost looks like a rug pull. And then what I want to see as well is let's look at market cap. You had a market cap of 53 billion and that market cap went from 53 billion down to less than 5 billion in a matter of 2 months. So very big cash out. But from what I know about ICP, it's a very long-term play. It's going to take time to play out. So yeah, in terms of top 10, I'll just Bitcoin, Ethereum, Cardano. That's about it. Nothing else. And the White House literally just destroyed XRP in their report because they said that stablecoins are going to be used for international transactions and remittances, not XRP. So, yeah. But that's kind of it, guys. I mean, nothing too crazy. Again, just more banks going under. Coinbase getting hit with the Wells notice. They're going to be attacking staking services. So just be ready for that. But yeah, guys, any final questions here before I wrap up? I might do like an actual video on the whole report as well because it is really interesting. All right, guys. Well, I'm going to wrap it up there. And then make sure you guys do go give me a follow on YouTube as well, or on YouTube, on Twitter. There's my Twitter right there. Make sure you guys do give me a follow. And yeah, I'll probably try to make either a long-term video today, or I'll maybe go live again like over the weekend or something like that. All right, guys. So yeah, I hope you guys have a great rest of your day, and I'll catch you in the next one. Take it easy.